Why is crude oil's price so volatile? I'm Bob Stokes reporting for Elliott Wave International. In June 2014, a barrel of crude oil was up near $100, and from there fell to recent lows under $40. Oversupply is a frequently cited reason for the tumble, as reflected in these headlines. Oil prices near six-year lows on oversupply fears. Wall Street Journal, August 6th. Oil prices could keep falling due to oversupply. The Guardian, July 15th. Financial turmoil in China is another culprit. Quote, oil's biggest one-day drop in nearly 2 months suggested that worst-case fears over the economic outlook in China have eclipsed immediate signs of persistent oversupply as the main motivator, end quote. One industry publication managed to join the two fundamental causes into one headline. Quote, oil trades below $40 as China turmoil adds to oversupply concern, end quote. But do fundamentals really explain crude's immense price slide? A little research reveals why it's hard to argue yes. First, the oversupply goes back several years. In August 2010, Futures magazine ran a headline titled, quote, oversupply of oil takes backseat to dollar. In June 2012, the National Bureau of Economic Research published a paper titled, quote, the incidence of an oil glut, end quote. Despite this oil glut, prices traded mostly between $80 and $105 during the 3 years before the June 2014 high. What's more, oil started its downtrend more than a year before the Shanghai Composite's July 2015 top. So if fundamentals are not driving down the price of crude, what is? Our evidence suggests that crude oil and other financial assets are caught in a rare deflationary trend. Take a look at this chart from the August 14th Financial Forecast Short-Term Update. Quote, worldwide deflationary forces continue to intensify. Commodities are down 62% since the July 2008 peak, and the Bloomberg Commodity Index is at a 13-year low. Today, crude oil made a new 6.5-year low, with the active futures contract declining to $41.35, the lowest level since March 2009. Oil is down 72% from its July 2008 peak at $147, end quote. After the chart posted, oil prices continued to slide. Counter-trend rallies are, of course, inevitable. Crude jumped over 10% on August 27th. The big picture suggests that prices remain a long way from a low. Prepare for what's ahead with our free financial insights. Just click on the video screen to tell us where to email them.